Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, August 6th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, we have the wave of panic that happened on the market so far. If we take a look at this situation here, all the indices are heading towards the same direction, towards their lows. If we take a look at the situation on the TSX, on the Dow Jones, and also on the SPY as well. There's really no reason that could explain why we have this wave of selling pressure, though. The only thing is that we know we have several earnings that came out today. Some of them are positive, some of them are not so positive, have missed estimates, but this is mostly what we have on the resources, on the markets today. Now, if we take a look at some earnings, we had Transocean that did well, Prudential that also did well. If we continue with some stocks on the Canadian side, we had Trilogy Energy. Well, this company, they missed estimates. A lot of energy companies have missed estimates. Tourmaline as well. Paramount Resources. SNC-Lavalin took a big hit after missing analyst estimates. So that's one of the key players there on the industrial sector that explained this important decline that you see there on the industrial sector. If we continue here, we have Richmond Mines that actually did worse than estimates, but Richmond Mines is in a clear breakout. And really, and this type of situation in terms of those breakouts that are moving in the earnings, those are not some breakouts or some buying or shorting signals that would like to favor. So Richmond Mines, it missed estimates, but revenue slightly increased, and the stock is surging on that news. It might be just short-lived, and this increase might not continue in the next few days. Midtown Networks also missed estimates. The stock took a big hit. So overall, folks, we have earnings season that continues to go on. Several companies have missed their earnings. A lot of them have missed estimates on the Canadian side. But so far, if we take a look at the situation overall on the TSX, the sectors that are taking a big hit are the sectors that were strong in the last 2 days rally that we had in the last few days, such as the consumer discretionary sector, which now turned out to be into a neutral cycle with this bearish momentum. But the other sectors that stay strong are gold, energy. Those are the two sectors where I'm going to focus my attention on today. So let's start with the energy sector. If we take a look at the sector here, oil is pursuing its decline, but at a certain point, oil is going to be a clear buying opportunity. So the decline in oil, though, has not been really followed by energy stocks. Yes, at opening, the energy sector resumed slightly. It's very shackled, but a wave of buyers came back to bring again the sector into a neutral cycle. And this is what we're starting to have towards the energy stocks. We have some stocks like Whitecap, which at opening made an attempt to start a clear breakdown. Right now, it's neutral, back within its sideways formation. Precision Drilling, same scenario as well. Transglobe Energy, same scenario as well. Imperial Oil, same scenario as well. So the technical situation that we have right now on the energy sector, it's a situation where eventually there will be several stocks that you could put on your watch list for potential buy when we will have the confirmation of a bullish cycle. And the confirmation of a bullish cycle will only happen if the energy sector could go above 190 points. So far, it's not the case, but all those stocks here that you see that are highlighted with an S are all stocks that are right now in a nice technical neutral formation and that could break out on another wave of buyers on the energy sector. But so far, it's still timid. Concerning the steel sector, I know yesterday I've talked to you about the steel sector. The thing is, in the steel sector today, at the end of the day yesterday, the movement was fading. The upward momentum was fading, but we do have right now some another wave of buyers that came in. On the steel sector today, there's Labrador Iron Ore, which I find is one of the best few breakouts that we have in that sector. We look, clear break of all those resistance in the intraday chart on Labrador Iron Ore. Now, as a target, we have 1511. That could be a target. If we put a Fibonacci retracement from that top to that bottom, we see that yes, 1511, 1540. This is the target on Labrador Iron Ore. So you don't have a real 10%, but definitely that's a way where you could build up your long position and also continue to put your stop loss at $13. In terms of the stocks that were breaking out like yesterday on the steel sector, such as ArcelorMittal or Rio Tinto, most of the stocks are continuing to go up. United States Steel made an attempt to break out yesterday, but so far it's not pursuing with a lot of strength. But still, if you bought that stock yesterday, you still have to hold on to your positions on the steel sector that were having a bullish momentum yesterday. That was the end of my sentence. Now, let's continue here with the gold sector. Now, we have the gold sector here that is still neutral, but take a look at this. The gold sector is the strongest sector today, but we continue to recommend on MarketGurus.tv to day trade this sector. Why? Because the sector continues to remain neutral, and in the last few days, what we have found is that it's really rare that the upward momentum that we see on a sector for the day can continue in the next few days. So to rush and buy a lot of positions for swing trading on the gold sector on today's increase is inappropriate. I'm giving you an example. For instance, Kirkland Gold is among the few breakouts in the gold sector, but take a look at the moving average to give you what are the potential on a stock like that. So right now, if you're buying that stock at 495, we see that at 525, which corresponds to that former resistance and also to this 50-day and 100-day moving average, this is where the resistance is. So definitely we don't have this potential that will allow us to make a 10-15% on a lot of those gold stocks. We also have Gold Corp. Timid, really timid breakout on Gold Corp. Now what are the targets in that stock? Towards that former support, towards $20. So yes, there could be a 10% on Gold Corp, but we see that around 1848. We could also pause on a stock like Gold Corp, and we're already overbought. So that makes this breakout not of quality, even if we are going up today. So if you want to get into that stock and you also are willing to tolerate a correction, I would say maximum $17. This is where you should put your exit point on Gold Corp. I would not put my stop loss at 1621 because that would be too much of a loss potential, knowing that at 1850 we might stop, and knowing that if ever the rally continues, well then 1971 becomes my next target on a stock like Gold Corp. So I think the safest alternative is first to day trade the gold sector, and then if ever we see the increase continues tomorrow in the next few days, then you could consider some positions for swing trading. We have Barrick Gold today that is rising. The company is selling some of their production in Dominican Republic and the mine in Dominican Republic for $610 million. They also are cutting their dividend after having weak earnings. If we take a look at Barrick Gold, though, Barrick Gold, did they miss estimates? Yes, they did miss estimates. They made a loss of 1 cent. They were expecting a profit of 6 cents. Dator Gold is also a nice one. It's a clear rebound for Dator Gold, so that would not be a into a bullish to a breakout, but Dator Gold could pursue its rebound towards 1349 if ever the momentum can continue on the gold sector. Right now, I would not get it on Dator Gold for the moment because I continue to see weakening volume on today's rebound. So that is actually something that's a trigger or red light saying that, oh, maybe it's not really a quality breakout. So this is what we have, folks. We see energy stocks are neutral. Gold stocks so far, some of them are breaking out, but the breakouts are lacking quality, don't have a lot of potential. So therefore, on the gold sector, yes, there's some opportunities to day trade. Dator Gold or Barry Gold, for instance, was recommended on marketgurus.tv, and it's still active for day trading. Look at Barry Gold there. You see, you do have several entry points on Barry Gold. One here that happened, just one there. Now the next entry point is going to be at 935, but we're not going to have it for the moment because we overbought and volumes are declining. So I expect a pause or stabilization phase in Barry Gold. But definitely you had a great entry point on day trading on a stock like Barrick Gold. Now, I want to show you here a list of the best breakdowns that we have on the markets. There's News Corp, and we try to make sure that a lot of those breakouts that I'm showing you, they're not moving on earnings and they're not losing, let's say, 10 to 15%. So those are the new breakdowns. We have News Corp, we have Canaccord Financial, we have Power Financial, which is, I know one viewer, I'll talk to him about what's the scenario in Power Financial to short it. Well, today it's a nice short opportunity for Power Financial. Inovio Therapeutics, also a clear breakdown. Second Sight for a target of 1150, so that's what you should target on Second Sight. Coles Corp, clear breakdown there as well. 6250 as your buyback order. So to close that position, the stock needs to go above 6250. Best Buy, pretty nice short for Best Buy. 3248 is actually the point where you should actually get out on that short position. So this is the list here of the best breakdowns that we have, and it's mostly a wave of selling pressure that we're seeing today on the markets for no reasons except for the earnings that some of them have disappointed investors.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have one question here from
Find answers to your
1770. Yes, so Albot IT at 1771, support at 1695, which is right. You're right there, 1695 around this area. Yesterday, a drop after announcing financial results for August 12. Could you analyze, please? Well, Entertain Group, it's a stock that we did recommend in our analyst shares portfolio here on July 30th. So you bought maybe at the same point as us. Now, it's a stock that we continue to hold on to. On August 12th, they will release their earnings. If ever we see the stock that actually goes below 16.95 before Wednesday, which is when they will release their earnings, if ever we see the stock testing that support, we're going to close that positions ahead of their earnings. Now, so far, it's a hold on IT Entertainment Group. Yes, there's a wave of sellers that is on that stock, but we still see that the stock continues to stay within that triangle formation. So this upward trend has not been reversed, and this support has not been broken down. So therefore, an entertainment group, there's no need to close that position. It's still a position that we still have in our analyst trust portfolio on marketgurus.tv, and as long as it remains above 1695, we're gonna hold on to it. As I said, if ever on Tuesday the stock remains low, remains weak, remains at its support, we're gonna close that positions ahead of the earnings on August 12th. So that's a strategy that we have on a stock like that, but so far it's a hold on that position. Now, when is the time for buying HVU and at what price? Well, what I said yesterday is that to consider HVU as a entry point, look at the SPY. And so far we have the SPY here that broke down out of this neutral formation. So I would say that today HVU, yes, it's a buy. Now, it's a buy for HVU because the SPY is clearly breaking down. The SPY could head towards 206 or 205. 205 corresponds to that support. 206 corresponds to the 200-day moving average. So there's not much potential, but there's some potential on the SPY. On the NASDAQ so far, if we take a look at the situation here, we have a situation where the NASDAQ could rebound towards at 5,000 points. So we close to a rebound on the NASDAQ. Now for HVU, it's an ETF that we still have in our analyst choice portfolio on marketgurus.tv. Now, as for the exit point on HVU, you could say, you know what, I'm going to go for short term. I'm going to put my exit point, if ever we lose all of today's gains, put it towards 280 on a stock like, on an ETF like HVU. So that could be an alternative that you could do. Put your exit point at 280 to play on the short term, because the risk that we have right now on the SPY is that 206, 205 is actually really close to the current level on the SPY, and that might not allow you to make a lot of money on HVU. Therefore, you could say to yourself, you know what, maybe I'm gonna close my positions early on, so I want to avoid having to tolerate a rebound that might bring the SPY towards its neutral range. Or if you have, let's say, from a medium to long-term perspective, such as we do, because we have continued to hold on to our bearish ETF since this moment here, and we had to tolerate this rebound on the market. So we do have some kind of a medium-term horizon, and if you do have that medium-term horizon, I would say that as long as you have the SPY that remains below 211 points, well, you should continue to hold on to your positions on HVU. That's only if you have a medium to long-term horizon and you're willing to tolerate a potential rebound on the SPY and also a potential loss on HVU. But if you want to make a quick buck, you don't want to tolerate a loss, I would say that watch the SPY, see if it can reach 205, 206, and let's hope that HVU will have enough buyer's momentum to allow you to take a quick profit on that ETF. But today, yes, it's a great entry point on HVU. Now, why gold is going up? Well, there's no real reason on why gold is going up. I think maybe some investors, they see a lot of earnings that were not so good, so a lot of fears. This is why investors are rushing into the volatility index and also rushing into gold, because they say that if ever the ADP employment report that we had, I think yesterday, was not that good, well, maybe the employment report tomorrow is not going to be good in the US, and this is not gonna make the Fed members to vote for a rate hike. And if they don't vote for a rate hike, well, then it's gonna be positive for gold. So those are all some mix of reasons why we could see why gold could go up today. But as I said, this momentum, this rally that we see in the gold sector, it's not for swing trading. It's all about day trading. Some stocks have been active. We saw Barry Gold intraday wise, but for swing trading, we'll need at least a second, third day of increase to confirm the strength of today's rally. Because in the last few weeks, though, we have seen several times where there was an attempt to start a bullish cycle that totally deflated on the gold sector, and this is why I think you should continue to remain cautious. Now, I want to show you some nice day trade that we had today, folks. We had Chesapeake Energy that did perform well. Next entry point 790 on Chesapeake Energy. You had those two entry points on that stock. But our day trade of the day, those are, you have a choice. Either HVU, TVIX on UVXY, Those have been our top picks of the day. They were recommended since this morning on marketgurus.tv, and you see all those entry points that UVXY gave. You see also all the entry point that TVIX gave us also intraday wise. So definitely you were lucky if you had the opportunity to get in on those volatility ETF with today's decline on the market. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show. Today, I would say it's not a moment to open a lot of new short positions. There are some exceptions, as I've shown you earlier. However, most of those buying and selling signals of today are mostly due on earnings, and shorting or buying a stock on its earnings, usually it's not always a winning strategy, because those stocks upward or selling momentum tend to be short-lived. So I would say that remain cautious in opening new positions. If you want to consider some gold positions, I would say wait for maybe day trade some of them today, close some positions today, and if ever tomorrow we see a pursuit of the increase, you might build up your position again. That's the safest strategy that you could do for the gold sector, which is the only sector that is rallying strongly today without starting any clear bullish cycle. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.